Rand trading back below 7 Rand as we come into the new week, and of course that's after trading up to 7 Rand 5, 7 Rand 6 on Wednesday. We did have that trade number out on Friday, and that surprised to the upside.
Hi Stephen, yes, we did see the rand weakening for most of last week, and that was due to the dollar weakness, and actually the dollar strength, and also due to mounting expectations that the SARB will cut interest rates in 2 weeks' time. But on Friday we did see the rand regaining some of its losses, and that was mainly because of the suppressed trade balance, as you said, and that was mainly with exports increasing much more than expected while imports declined. And of course this is positive for the rand because of the current account and the balance of payments, as you know, this number does bode well for those two factors.
Of course, we do have quite a busy week this week. We have PMIs coming out today. We have the Fed meeting tomorrow and Wednesday. We also have other banks such as the ECB, the Bank of England and the Bank of Japan all meeting. Let's start off with the PMI because China kicked off the ball this morning. Official PMI rising to 54.7, and that looks like it was slightly better than expected.
Yes, Stephen, it's going to be quite a busy day today with PMI from most of the countries. Like you said, we have Chinese data coming out today, and it did show that you know, China is really growing strongly and much more than expected, and that reinforces, of course, expectations that the Chinese authorities are likely to hold rates steady for the rest of this year. And for the US, the ISM will be out later on today, which is expected to show a slight moderation. And for South Africa, we're expecting the Kagiso PMI at 11:30 this morning, where the data is expected to be just around 50 points from 48.4 that we saw in the last month. And of course, this data is very important because this will form early indication of how the fourth quarter GDP growth will look like in these countries.
Of course, you talked about the ISM out of the States expected to be a little bit softer. We had that GDP reading on Friday of 2% growth, so in line with expectations. How does this set up the Fed for that rate decision, or the quantitative easing decision on Wednesday? Do you think this all points to more quantitative easing?
No, the US GDP did come in line with expectations, and of course, although it's a slight increase from the 1.7 that was seen in the second quarter, the number does really didn't give a upside surprise for the market, because we know that the jobs data and the the labor market in the US is still very weak, and you know, that didn't really change expectations of further policy easing at the US. Like I said, you know, given that the weak labor market does need a bit of stimulus from authorities.